Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and success strategies. Hello, I am Michael Bull. Thank you for being with us. Our sponsor of this segment is CommercialAgentSuccess.com. Check it out. It's commercial training or training for commercial agents. It's good, I know, because I created it. It's CommercialAgentSuccess.com. Well, today we're going to talk about the office sector, and I think it's a very interesting sector these days with, maybe it's one of the sectors that people are maybe a little concerned about, that and maybe retail. It's not as hot as multifamily or industrial. A lot of changes in how office space is used. And we're going to talk about some of those changes and how they're impacting the market and how they're impacting maybe you as a tenant or an investor. Well, first, let's take a look at the investment sales market. Please welcome my guest, Jim Costello. He's Senior VP with Real Capital Analytics, and he's joining us on Skype. Jim, thanks for being with us, sir.
Hey, thanks for having me here.
Well, let's talk about investment sales. You guys track investment sales of all sectors. And when how do investors feel today, Jim, when they look at the office sector, if you will, compared to the other sectors like maybe the hot multifamily or industrial market? Are investors a little wary at all, or are they still hot on office?
Well, there's some mixed signals in the office market. Activity in May actually grew, and so even as it fell for other property sectors, even some of the hot sectors that you were talking about. So that's one mixed signal. But at the same time, there's some concerns about what happens next with the use of office space, and what type of longevity will these investments have. So there's some concerns on that. And then the other concern is, am I getting this at a good price, given that cap rates are at record lows and prices are at record highs? So there's a lot of cross currents happening in the office market right now.
Well, that's interesting. And sometimes if there's a little equilibrium in the market, sometimes it can make for a good market for savvy investors and operators. So what are you seeing? You mentioned activity was strong in May. What are you seeing overall year to date?
Yeah, I mean, for the year to date, deal volume is down from last year, but we had a turnaround in May with some growth. That said, I think that growth is not part of a sustainable upward trend. It's really because of a handful of big deals that you're not necessarily going to have deals like these every month. CNL Healthcare sold, and that deal really boosted suburban deal volume. And then the CBD locations, we had three big billion-dollar-plus transactions that moved the needle. Although those were kind of interesting as a trend because it was really kind of technology-focused assets. An interest in Salesforce Tower sold. A portfolio of assets in Kendall Square in Boston sold, and outside of Boston. And then the Google did another deal in New York. And so, that type of activity, with a tech focus in CBD locations, there's a bit of a theme there. Generally, though, deal volume was down without some of these outliers.
Okay. And what are you seeing for cap rates, Jim? You mentioned they've been a little flat?
Yeah, and it's funny because last year into the fourth quarter, the 10-year Treasury spiked upward. We went up to 3.2, and then recently it has been toying with the 2% level. So cap rates between now and then have been steady as she goes. CBD cap rates for office around 5.5, suburban cap rates around 6.8. Very little movement in response to all the turmoil of what's been happening in the bond market. And I think part of that just comes down to the investors looking at the income they're getting from the assets, seeing the noise in the financial markets, and just pausing and waiting to see a true signal appear. There's a lot of up and down, a lot of uncertainty in the global economy, and real estate, you have a cash flow, you know what you have, and there's a sense of not panicking and trying to sell now when they don't have to.
Yeah, well, it's interesting. It seems like some investors that we talk to kind of interested in office because maybe there is some trepidation with some investors, and maybe there's some opportunity. And you mentioned some suburban sales. So what do you see there for suburban volume and interest in office properties? I thought suburbia was dead when it came to office.
Yeah, this is the thing. The suburban office market is starting to change. In fact, into the last 12 months, we've seen a real disconnect between suburban deal volume and CBD deal volume. In a normal period historically, they have about the same amount of deal activity. We've had around 77 billion of deal volume in the 12 months to the first quarter of 2019, only around 50 billion in deal volume in the CBD locations. That's a wide gap. And I think part of that is, the CBD locations, it's a lower cap rate, it's harder to make a return pencil out, so that restricts some of the capital flow. But I think there's other reasons that are motivating investors beyond yield to go to the suburban locations. And part of it is just a change in the perception of suburbs. Early in this economic expansion, and this is the longest economic expansion we've had ever, early on, everybody wanted to be in the CBD locations because that's where all the young people were moving to. This expansion has been so long that those young people have moved on. They're older, they've started families, they're moving to the suburbs. And that has some real implications for where investment capital will go. And young people have to move to the suburbs because that's where most of the housing has been built in the last 15 years. And so as firms chase workers, they have to be in suburban locations as well. So there's probably a yield story driving some of that, but I think there's a real good income issue with investors looking to go where the firms want to be and looking to go where the workers are. And those kind of issues reinforce each other.
Yeah. We're headquartered here in Atlanta, and we have some strong suburban markets where there's really strong rents and strong growth. And of course, there's some pockets that haven't experienced the growth. And you mentioned, I guess, the elephant in the room, Jim. I mean, you mentioned where we are in the cycle and how long this cycle has been positive. What do you expect moving forward? How long do we have that things can still go well? What does your crystal ball tell you there?
I mean, one of the quips that people have had about economic cycles recently has been that economic expansions don't die of old age.
Yeah.
What it really comes down to is looking for imbalances in the economy today that might undermine the growth. This is a topic of discussion when I go to the Urban Land Institute meetings. I get together with a group of real estate researchers at every ULI meeting, and we raise that question: what imbalances does everybody here see that might undermine things? And when we talk, recently there just haven't been those imbalances that need to be worked out. I'm a little bit concerned, though, about the venture capital funding for a lot of businesses. Some of these businesses that have been started by the venture capital world just aren't earning any profit at the moment. And so if you're pouring money into things that aren't generating any profit, there's only so long you'll be willing to do that. And some of those venture capital funded firms are leasing all the space that's out there. So what's happening this year with the IPOs, the money that's coming in, watching that, if firms start trending towards profitability, I think that's a healthy sign. Until you start seeing that, I think you might be on some thin ice about that money going away and undermining some of the demand on the office side.
Yeah.
But in the near term, it seems like everything's fine.
And that's interesting that you mentioned that, because you also had mentioned that some of these sales, large sales, were kind of based on technology-type tenants, right?
That's right. But the technology-type tenants, there is an understanding that that's where the productivity and the growth is in the economy. Mm-hmm. And investors are willing to invest in these firms, even without profitability, knowing that once they hit scale, they could become wildly profitable. It's a matter of being able to pick the right winners on that. Yeah. And that's one thing that's nice about investing in the office market as opposed to picking these technology firms. As long as you're in the right office market where those firms want to be, you're going to participate in that. If you pick the wrong firm to invest in the tech sector, then you're out of luck.
All right. Well, Jim, I want to get back into that think tank room with you guys at ULI. And when you're talking about things that could trigger a change in the cycle. What else was big on the list?
Yeah, other things that are big on the list that might undermine this economic cycle. One thing that has been particularly raised with me as I've been traveling this spring, everybody was asking about trade war issues and what that's going to do to the U.S. real estate market. And that's one that there's a concern, but I think it's a little bit overblown. I'm not a fan of restricting global trade, but to the extent that some new tariff barriers have been thrown up, I don't think it's necessarily the kind of thing that could lead to a recession. It's really just a tax on U.S. consumers. We had some tax cuts last year, and then the tariffs are just new taxes on U.S. consumers, and so they kind of balance each other out. It impacts some areas much more than others. Farmers in the Midwest are hurting. Certain parts of the country have some challenges, but it's not impacting much of the economic activity that supports the commercial real estate market.
Interesting. We're talking with Jim Costello with Real Capital Analytics about the office market. And Jim, jobs, obviously impact the office market. Do we have enough people to hire to keep up strong job growth? Was that something that kind of came up in the think tank?
That has been an ongoing issue of discussion. What is the nature of the labor market? Where can we find the jobs? It is the case that the baby boomers are aging. They're entering retirement. They're leaving the labor force. Finding workers to replace them is going to be an issue in certain sectors. One in particular, it's not an office market issue, although tangentially it can be, construction workers. It's hard to find construction workers in many markets today. So if you want to build an office building as a form of investment, it's going to take you some time to find all the right people, get the right subcontractors in place. That labor is harder to find at this point. For other types of workers, one of the issues that happens, immigration has shut down certain types of workers from around the world. Tech firms are doing some relocations in that case. If I can't bring, say, an Iranian programmer into my tech firm in Seattle, I'll just move them to Vancouver instead. And we've seen some growth in Canadian markets because of those kind of issues.
Yeah, and you mentioned construction cost issues, and it's interesting because that seems to impact a lot of things in the office market, from new supply and the cost to create new supply, and then the tenant improvement dollars and the cost, and how that may be impacting renewals and tenants staying and maybe moving less. So interesting. So what do you think, Jim, moving forward then overall for office market performance for the sector moving forward?
Yeah, the office market moving forward, the U.S. economy is increasingly a service economy. You need the office space to deliver that service, and so it's going to be less than it had been in the past in terms of the type of return investors get. When you had cap rates falling from a 7 to a 5, that delivered an awful lot of capital gain that helped deliver performance. So it's not going to perform like that anymore. It's going to be more steady as she goes, more focused on the income, more of a yield play, and trying to manage that. So it's going to take a lot more day-to-day activity to kind of make these things pencil out. But there's still going to be demand because, again, the economy is a service sector economy, and this is the place where that happens.
Yeah. Yeah, all right. Well, it makes me feel better. Jim, great information, sir. Thanks for joining us.
Oh, thank you.
All right, now stay with us. We're going to talk about some use of office space and some technology that you want to know about. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com. Red IQ. turning multifamily data into actionable intelligence. Visit rediq.com.